China is hosting the kind of summit that screams, look who's boss. In Tianjin, Xi Jinping is welcoming Vladimir Putin, Narendra Modi, and a lineup of leaders from across the Shanghai Cooperation Organization, SCO. For Beijing, this isn't just about nice photos. It's about positioning China as the anchor of an alternative world order. With Donald Trump shaking up alliances in Europe and the US doubling down on tariffs, Xi is using the moment to showcase Beijing's ability to pull together autocrats, democracies, and everyone in between under its umbrella. For Putin, it's a lifeline of legitimacy while he's still embroiled in war in Ukraine. For Modi, it's a chance to balance India's ties with both the West and China. And for Xi, it's the perfect red carpet moment to say, the future of global power doesn't just run through Washington, it runs through Beijing. After years of border skirmishes and frosty vibes, Beijing is suddenly warming up to India. Chinese officials are calling stronger ties in the interest of both nations. What's driving this change of heart? On one hand, India's economy is booming. It's the fastest growing major economy, and its population just surpassed China's. On the other hand, China needs allies to push back against US pressure and can't afford a hostile neighbor on its southwestern border. For Modi, this is tricky. India's defense ties with the US are stronger than ever, but New Delhi still wants access to Chinese markets and investment. So while the history of clashes in the Himalayas isn't going away, both sides seem willing to put pragmatism first, at least for now. China's top trade negotiator, Li Changgang, just wrapped up a trip to Washington with a message. We want cooperation, but we want it on equal terms. He was referring to the ongoing trade war truce that's given both economies a breather. Beijing hates being treated like the junior partner in talks. Li's words, equal dialogue and consultation, signal that China wants a reset in tone, not just in tariffs. With another round of trade talks on the horizon, this is Xi's way of telling the US, drop the lecturing, let's deal like equals. It's a careful balancing act. China's economy is slowing and US markets still matter enormously. But politically, Xi can't afford to look weak at home. Expect more polite but firm diplomacy in the months ahead. From Somalia to Ethiopia, China is pitching itself as Africa's peace partner. Under its Global Security Initiative, Beijing is offering scholarships and training to African military officers, hoping to position itself as an alternative to US or European-led peacekeeping. For countries like Somalia, still grappling with conflict and extremism, China's message, we will not be absent, sounds like a commitment that goes beyond just building roads and ports. It's Beijing expanding its Belt and Road playbook into the security arena. But there's a twist. Western officials see this as China extending influence in fragile states where the US footprint is shrinking. For Beijing, it's not just about peace. It's about long-term political leverage on a continent that's young, resource-rich, and strategically vital. The latest data shows China's manufacturing sector is still stuck in contraction even after tariff relief from the US. The official PMI came in at 49.4. Anything below 50 means shrinkage. So what's going on? The government's crackdown on price wars, where companies slash prices to the bone just to survive, is keeping output weak. At the same time, global demand isn't strong enough to lift factories out of the slump. Services and construction are holding up slightly better, but for an economy long powered by exports, the months-long slowdown in factories is a worrying sign. It paints a picture of a country still struggling to find its post-pandemic growth engine. At a Bitcoin conference in Hong Kong, Eric Trump dropped a surprising line. China is a hell of a power in digital assets. Odd words considering Beijing banned most crypto trading back in 2021. But he's not wrong. China still dominates the supply chain of crypto. From mining hardware to blockchain infrastructure. Even when Beijing bans, its influence leaks through global markets. Eric's comment is a reminder that whether the US likes it or not, China remains deeply embedded in crypto's backbone. For a Trump family that's now back in power, it could also hint at a softer line toward digital assets and maybe even toward Beijing's tech clout. The Trump administration just tightened the screws on chip gear sales to China. This time, it's Samsung and SK Hynix in the firing line. Their special waivers allowing them to ship advanced tools to keep their massive Chinese fabs running are gone. This is a huge blow. China is home to some of their biggest production hubs, and without cutting-edge US gear, those factories could fall behind fast. For Seoul, it's a nightmare. Two of its crown jewels are now trapped between US policy and China's market. The broader picture? The US-China chip war isn't cooling. It's escalating, and collateral damage is piling up. Taiwan's opposition Kuomintang KMT has survived 2 big recall votes, giving it fresh momentum heading into local elections next year. But instead of celebrating, the party is paralyzed by a leadership vacuum. The problem, nobody wants to take charge. The job is seen as a hot potato thanks to deep internal divisions and the challenge of standing up to the ruling Democratic Progressive Party, DPP. Yet if KMT can rally, it has a chance to regain real power by 2028. Right now, though, it feels like a party stuck between hope and chaos. Here's a rare piece of good economic news. China's stock market is booming. Monthly turnover hit a record 2.2 trillion yuan, 309 billion, as more investors rush in. For Beijing, this is a bright spot to brag about amid weak factory and property data. The bull run is drawing in new investors daily, suggesting confidence, at least in the financial markets, is alive and well. The question is whether this rally can last, or if it's a sugar high in an otherwise shaky economy. China's property crisis keeps dragging on, and Country Garden, the country's largest private developer, is sinking deeper into red ink. The company reported a $2.7 billion loss for the first half of 2025, nearly 50% worse than last year. This isn't just about one company. Country Garden's pain reflects the whole sector: years of overbuilding, falling home sales, and mountains of debt. For millions of Chinese families, it means stalled projects and shrinking wealth. For Beijing, it's the biggest economic headache: how to stabilize the housing market without bailing out every developer in sight.